Alright, this is going to be a really strange first video, and the reason I say that is because I'm taking a break from trading. You're thinking, Steph, this is your first video, you're already taking a break from trading? This is a trading channel. How are you going to kick off a YouTube channel by taking a break? Well, I have been trading for almost exactly 6 months before I'm filming this video, and the reason I have to take a break is because of something known as the PDT rule. Hopefully you know what the PDT rule is. I'm not going to explain it all here. You can search other YouTube videos that can do a much better job explaining it than I can. But essentially, my account either is flagged already or is about to be flagged for pattern day trading. And since I have an account balance of less than $25,000 on a margin account, this could result in me losing the ability to place trades for 90 days. So, how did I trigger this rule? How did this happen? Well, when I place a trade, when I buy stocks, immediately I place a stop loss order. So I buy the trade, and then I place another order saying that if the price drops by a certain amount, that I want to sell my shares. And I do that to protect my capital, so I don't lose too much money with one trade. The problem with this is that if you buy and sell a stock in the same day, that counts as a day trade. And if you do that 4 times within a rolling 5-day period, you'll get flagged as a pattern day trader. And if you have less than $25,000 in your account, in a margin account, which I do, you'll be banned from trading for 90 days. So what I originally did was I put those stops so far away from my entry that there was very little chance that they would get hit in one day. Now, a consequence of that is that I had to drastically reduce the number of shares that I was buying. Because if that stop is so far away, that if it goes down that low, I'm going to lose a lot of money, so I buy fewer shares so that that big price drop doesn't actually lose me a lot of money. So I was limiting my upside potential as well, because if I buy fewer shares, I'm going to get less money if that stock goes up. So I've been in kind of a lose-lose situation. Well, fast forward to about the past 2 weeks, I've been in a drawdown. So I hit a new high a couple weeks ago, and my account has been steadily going down, down, down about 15% since then. Now that's fine, that's normal. Any successful trader is going to tell you that there's periods that they have drawdowns, and they have a plan for this. I had a plan too. My plan was to make my stops much shorter, so bring up my stops, and I'm not losing as much money per trade. Well, that resulted in multiple of my stops getting hit within one day. Okay, so I'm actually doing something very, very responsible. I'm taking less risk with my trades. But because those stops are so close, they're getting hit within the same day. And now I have 4 day trades on my account. And by the time you're watching this, I might not be able to place trades. But anyway, I really don't know what's going to happen with this account, whether they're going to flag. For right now, it seems like they haven't taken away my ability to trade, but maybe they just haven't found it yet. Maybe someone's reviewing it, you know. So it's all kind of up in the air right now. Either way, I'm going to have to take a break from trading for at least 5 days until I'm past that 5-day rolling period and I can make a day trade again, basically, because I want to keep these stops really short. I want to keep the distance between where I get in and where I would potentially get out to be very short, to limit my risk since I'm in a drawdown. When you're going down, you want to limit your risk. You can do this by cutting position size or shortening your stops. So in the case that I have to take a trading break for 90 days, I might be moving to a different account. I don't have that much in this account, so I might be able to move over to another account, or I'll wait the 90 days. But in that interim, I'm going to be doing a lot more research on the market right now, trying to find the best stocks to get into when I eventually am able to trade again. And also I'll be starting an audit of all the trades I've done in these past 6 months, figuring out which trades worked, which ones didn't, my percentages, you know, by what percent was this trade profitable, analyzing my trades, looking for patterns, looking for what worked and didn't work. So that's going to be a pretty extensive process, and I'll keep you updated and let you know any interesting data that I find. But yeah, this is a really strange first video. If you have any questions, let me know in the comments, and I will, you know, respond to them either in the comments or with a video. Hopefully we'll be able to bring up the production value a little bit in the near future. I'm putting together a studio around me, as you might be able to tell, maybe not. But anyway, thanks for watching Dova Trades. Go ahead and subscribe. You know the thing. Here's where my catchphrase would go if I had one for the channel, but I don't yet. So for now, it's going to be really awkward. All right, I've talked for way too long. Ciao.